Hey everybody, happy Thursday. Um, Today I wanted to kind of continue our webinar series on what's going on with the PPP program as originated by the CARES Act. And it was my profound hope that today would be the last one that we would have to do on this topic. And as I was preparing for our chat today, it became uh, it became painfully obvious that that we are not going to we don't yet have the clarity that we were hoping for, and that we're going to end up having to do this again. I don't know what's going on in Congress. I don't know why they can't write a law. I don't know who's writing them for them. I don't know who's thinking. I don't know who they're talking to. It was candidly amazing that they got bipartisan support without spending any additional money. But I'm flabbergasted at what they did and how they did it, and that there's immediate problems with it. And all we can really do is, address them and go from there. So we'll talk a little bit today about what the changes are, what the traps are that I see, and kind of give you guys a launching pad or an understanding of where we're at and what's going on. So, I guess I give them a pat on the back for trying, but it just doesn't solve the issues, and it created more. So here we go. So the first thing that they did, President Trump signed the bill last Friday. It passed the House early last week, and then the Senate passed it Thursday. Trump signed it on Friday. And the first key provision, and this is really this provision is beneficial because there's a lot of businesses that haven't been able to fully reopen because of government restrictions and between COVID and the protests. So it's a beneficial provision. So you as a business owner that received PPP money can now take, the original period was 8 weeks. So you had 8 weeks to spend the money from the date that you received the loan. What the new bill does is it has extended that period to the earlier of 24 weeks or December 31st, 2020. So December 31st, 2020 is a hard stop date. If you aren't at 24 weeks by the end of the year, you're done. You have to spend the money by the end of the year is basically what they're saying. So you can now elect a 24, the standard is now the 24-week period. You elect an 8-week period. So you can still keep the 8-week period if you're basically done with your money. I know our office, we're at 8 weeks next week, and our account's at 0. So we're done. It's going to be really interesting to see how this plays out, because they, trying to be helpful, but it's like they aren't thinking through this legislation. It's just crazy. So this is the potential problem, and nobody's addressed this yet. I signed a loan with my bank. That loan says that my first payment is due 6 months after I receive my money. Right? And it was contemplated there would be a forgiveness provision in there. Now, if I have to wait until 12/31 of 2020 in order to get my forgiveness, or to be able to file for my forgiveness because they've now extended the payment period, how does that contract between two private parties, a bank and me, automatically get extended? The government doesn't have a right to go into independent contracts and change their terms. And so it's just, I wrote an article in Kiplinger magazine a couple weeks ago, and I expressed my frustration at the SBA and the IRS, particularly the IRS, in that article, for them not following congressional intent and changing clear statutory language in regulations. For instance, in the original CARE Act, the 75% on wages did not appear in the act. and IRS, or the SBA in that case, changed it. And this is another one of those things where I'm just sitting there and I'm like, okay, what is going on here? We have contracts in place. Everybody that's received PPP money has loan documents signed. And now they're somehow changing them through legislation. And I'm just baffled. And there's nothing in the change to address this. So I don't know if banks are going to amend the notes and allow you a longer deferral period for you to figure out if you get forgiveness or not, or if you're going to have to start servicing the loan 6 months afterwards and then let the forgiveness catch up and get a refund from the bank. If you get everything completely forgiven, I mean, it's just baffling to me how they can do a law, pass a law to clarify existing law and still have these issues. So it just makes me shake my head. So if you remember the last webinar we did, it was a little bit rushed, so I allowed a lot of time for today. We're not going to take the full hour, but remember what we talked about, the forgiveness process last time. And that forgiveness process involves you having to measure full-time equivalents for all the employees that you had as of February 15th, 2020. And then the date that we were using was June 30th, 2020. And then we had some other measuring dates that were safe harbors if something came up with an employee or employee count and that sort of thing. If your PPP money's gone and you're fine on your FTE count, then you can apply for forgiveness after the 8-week period if your bank is accepting the forgiveness applications. I received an email from my bank last week. They're not taking forgiveness applications yet. They're still trying to figure out how to incorporate all this stuff. So I don't know when they're going to start doing it, but I would like to get over with this as soon as I possibly can, to be honest. All right. So you have now up to 24 weeks or to December 31st, 2020 to spend your money from the PPP program if you elect to, or you can keep with the 8 weeks that was originally there. So that's provision number one. So the businesses that haven't been able to open, the barbershops, the massage therapists, the gyms, the restaurants, the bars, those sorts of people that are just ramping back up, that's a tremendous lifeline for them. And I applaud that effort. I just wish they wouldn't have created additional confusion on how to handle the deferral period and just, I wish they would have just thought this through a little bit, but I don't know who's doing this stuff. So that's key provision number one in the act that came last week. So you have an 8-week period or a 24-week period for spending the money. Okay. Second thing that came out last week, and this is probably the one that made the most news, is that you don't have to spend 75% of the PPP money on payroll. You can do 60% on payroll. Now, this is a tremendous thing for people that have businesses that have high rent or rent multiple facilities or do those sorts of things that aren't as payroll oriented because they were having trouble meeting the thresholds. So that's a positive for many businesses because now it's opened up some flexibility in how they can spend their PPP money, right? So you still can do payroll, rent, mortgage interest only on loans before February 15th, 2020. And you can do utilities, and utilities include phone and internet. I've advised my clients that I don't take both the office phone and the cell phones. I just do one of them. And most of the time I'm going to err on the side of just doing the office phones and leaving the cell phones alone. But, you know, if your business is on a cell phone, that's your phone, you can spend the PPP money on it. Now we have another problem with the statute. The statute, the way the language of the statute reads, if you don't spend 60% on payroll, you get zero forgiveness the way the statute reads. Now, it's hilarious to me how Washington works. I mean, literally within hours of the bill passing and Trump signing it, Senator Marco Rubio was asking Treasury and SBA and IRS for guidance on how to handle this issue we're going to talk right now because the cliff, they're calling it the 60% cliff. And if you don't spend 60% of the money on payroll, you get zero forgiveness according to the language of the statute. Now, SBA and Treasury have already issued a notice saying that's not what we meant. It's going to be like it was under the 75% rule, that it would be prorated. So if you did 58% payroll, then your benefit would be scaled back a little bit, but you wouldn't lose the bulk of the forgiveness. This is the problem I have. How can Treasury and the SBA alter the clear language of a statute? I mean, what are these people thinking that are, it just baffles me what's going on with who's writing these laws and who's advising them and who's thinking these things through. It's very frustrating as an advisor. It's very frustrating to you guys. I mean, I did an article again in Kiplinger this week, or at the end of last week, talking about how people need to move on from the PPP and focus on running their business, but they keep dragging us back into this hole of what the heck are we doing? And it's just baffling to me. It's incredibly frustrating. I can't even imagine how frustrated some of you are. The good news is, for the bulk of the people that I've talked to about the PPP program that I'm aware of, have basically followed the 75% threshold. There won't be a problem with the 60% cliff. And their money's basically gone. So hopefully there's some solace in that, and they aren't negatively impacted by the new ambiguity that's been created by the law. But it just blows me away that they established a cliff. A senator recognized it immediately, asked Treasury and SBA for guidance, and then they issue a notice saying, "No, never mind, that doesn't count." But it's like, it's the law, and the regulatory agencies can't change the statute. So they'll figure something out, and we're going to have an additional legislation to fix this. I don't know how. I mean, I've talked to several people that do what I do with my business owner clients, and looked at some blogs and some other posts, and it's amazing to me what is going on here, and they don't see a way to get around it either. So so that's all fine. We did have a question come in. I've been paying the health care insurance through PPP. Do I need to credit the PPP account for those benefits? No, that's considered a payroll cost. So if it's a company plan and you're providing health insurance, even if the employees are paying for some of it, that's coming out of the gross payroll. So the gross payroll is already in there. So, but your share of that would be like a retirement plan expense, and you can deduct that as well from the PPP money. That's considered a payroll cost. So there's no problem with that question. And yeah, if you guys have questions, just go ahead and chat them, put them in the chat box, and I'll do my best to address them as we go here. So anyway, so we've got those two provisions. We've got the 24 weeks now, and we've gone from 75% to 60%, albeit with their new level of problems, but we're hopefully going to get some closure at some point in time on this. But it's just absolutely mind-boggling what our elected officials are doing. I mean, they need to talk to somebody that's actually working with people and knows what these issues are, and let us read the code before they pass the bill, because it's just not right. Anyway, so this next provision is potentially a positive, potentially a negative. And it, again, is one of those things where the heck did this one come from, right? So it's crazy. But so if you remember, we talked last week when we were going through the forgiveness application, that if you did the full-time equivalent tests and you were failing the full-time equivalent test, meaning you didn't have as many employees at the end of the term as you did on February 15, 2020, that they gave us a safe harbor, and the absolute safe harbor was June 30th of 2020. If you had the same number of employees by June 30th of 2020, then you were exempt from it, and you were deemed to have met your FTE, and it was all good. So we we planned on that, right? So June 30th was my drop dead date. And what they've done is they've done the 8-week, 24-week, and now they've moved the forgiveness safe harbor from June 30th of 2020. There's no election here. So if you elect the 8 weeks, you can't pick June 30th. They've moved it to December 31st of 2020. Now, you may ask, well, gee, Bruce, what's the problem with that? Well, if you're in a struggling business, you now have an obligation in order to try to get forgiveness to maintain your head count for 6 more months. Think of the cash flow that involves. Think of the money that you now have to set aside in an effort to try to take advantage of the forgiveness program. And if your business is down and your employee counts are declining, but you still want to try to get forgiveness and you can get your FTE count up, you've now got to do that for 6 more months. I mean, if I need to use the safe harbor and I'm done with my money, it doesn't matter. I can't use the June 30th date. I've got to go till December 31st, according to the code. They didn't give us an either or. If you elect the 8-week, you can have June 30th. If you do 24 weeks or the December 31st date, it's December 31st. They've changed the date. And I don't know. I feel like I'm ranting and I apologize for that. They tried to help and they poured a little bit of gasoline on a fire because they created even more uncertainty at a time when we thought this stuff was going to get nailed down and we would have clear answers. It completely boggles my mind how they do these things. So right now, your forgiveness safe harbor date for employee headcount is December 31st, 2020. So if you don't meet your FTE count, so you need to be doing the calculation, and if you don't meet the FTE counts for 100% forgivability, you now need to consider the fact that you might need to carry a full staff, even if your business has declined, until December 31st of 2020 in order to meet the forgiveness safe harbor, which is just mind-blowing to me. And, we're talking now about, New York just started to open Monday. I can't even imagine how slowly or quickly certain states are going to be able to ramp up and get going in this economy. But I think bankruptcies are going to potentially explode. I mean, there are a lot of businesses devastated by this. I personally have 3 or 4 clients that are never going to open again. And it just is baffling to me that they've now put an additional personnel struggle on a business owner in order to try to get forgiveness. I mean, if my money's gone, how can they keep me in limbo for 6 more months? I mean, you have to do what you have to do, but it's just mind-blowing to me. So that's the third thing. So we've gone to 8 weeks and 24 weeks. We've gone to the 60% payroll, and now we have forgiveness safe harbor date moving from June 30th to 12/31. So that's where we're at on that. I got a question. 8 weeks ends June 15th, but I have a little over $10,000 remaining. Can I spend the balance on my rent and take advantage of the 24 weeks regardless of how many employees I retained? Remember that the forgiveness has 2 components to it. So the forgiveness is a big payroll component. So you have to meet the 60% for payroll costs. Then you also have to meet the full-time equivalency headcount, and you have to meet the not cutting pay. And then there is approved expenditure. So rent is an approved expenditure so you could pay your rent for that entire period, but it's going to be, and that's a qualifying expense, assuming your lease was in effect before February 15, 2020, which I know it is in your case. But if you still have to meet the employee headcount and non-cutting of wages in order to be eligible for forgiveness, because the those are the only components that matter. Remember, you could borrow 2.5 times your average monthly payroll, and the forgiveness application is driven by you employing people, and there's no other factors. So you have to have the same number of employees as you had February 15th, 2020 by December 31st, 2020, if you need the safe harbors, but you can spend that money on rent. I mean, they're not, if you've already met your 60% threshold, no problem spending on rent, but you still got to meet the employee stuff in order to get forgiven. Okay. So we've talked about 3 areas that changed. The 4th area that changed is that the problem that we're running into, and I've actually had 3 calls from clients this week about this, where people are unable to bring their staff back. Employees don't want to come back. And that is, I don't know what you call it. Employees are gaming the system because they're making more money on unemployment than they are if they come back to work. And I don't know, a bag of Cheetos and Netflix on the couch is more appealable to some folks than work, and I understand that. So what they've done in this bill is, again, if you've offered somebody a chance to come back to work and they've refused, that will not count against you in the FTE calculation. So your full-time equivalency calculation, the spreadsheet that is available, people that refuse to come back to work will not count against you. This is the one that's causing a lot of stress and tension for employers, right? This next provision, because the law basically says you are supposed to report to the unemployment office anybody that you've offered a job to that refuses to come back to work. So if they refuse to come back to work, you're supposed to tell unemployment, and unemployment is supposed to cancel their unemployment benefits. Now, I've talked to a couple clients, and they're like, well, if I do that, they're never going to come back to work. And I'm like, well, I understand that puts you in a really difficult position. But that's what the law says you're supposed to do. So my best advice is I would have document the offer back, document the employee's refusal to come back, so you protect yourself on the forgiveness side, and then have a conversation with your employee and just say, look, I don't know why you're not coming back to work, but the law imposes an obligation on me to report the fact that you're declining to come back to work to the state unemployment office, and they're supposed to terminate your benefits. And I guess leave it in the employee's hands. Is this really what you want me to do? I don't know how else to handle it. You got to be transparent and but if employee is not coming back and that's adversely affecting your business and your ability to get going again, then we got to do something. The good news is that the additional federal unemployment benefit of $600 per week, which goes to part-time or full-time employees that are on unemployment as a result of COVID, that's set to expire July 31st. So we've got a few more weeks of it, but it doesn't tie to June 30th and it doesn't tie to 12/31. But hopefully, once we get past July 31st, that incentive will go away because the checks will get a little bit smaller, and we can move forward. So there we go. Somebody asked a question: how do resignations impact FTE? If payroll is down on 12/31 due to resignations, is that still forgivable? Yes, if somebody voluntarily terminates employment, that does not count against your FTE. Again, that's got to be documented. You have to keep records on this stuff. So if you've offered and they refuse to come back to work, it doesn't count against you. If they've quit, it doesn't count against you. If they've asked to have their hours cut for whatever reason during this pandemic, then that doesn't count against you. But you have to document this fact, because remember, the banks are the arbiters of forgiveness, and This isn't going to go, I mean, it might go to the SBA for rubber stamp, but the banks are really the people that you have the conversations with about forgiveness, and you're going to need to have the records. I mean, I know the bank that I got my loan through is actually using a third-party service to administer the forgiveness process, because they're assuming the paperwork and the time involved is going to be massive. And so it's one of those things where you just got to document. And if you have a conversation with an employee, you need to write it down as soon as it happens. And, you know, if they are communicating with you via text, you need to screenshot the text, save the thread. I mean, do whatever you have to do, but you've got to have some sort of evidence that they've refused to come back to work, that they've quit, that they've done something else. And, you know, that's just for your own protection and safety. So, but that will not count against you in the forgiveness category. If you've attempted to rehire somebody, you should have documentation of the offer, and you should also document the refusal to return to work. That won't count against you in it, but you also have this obligation to contact the unemployment office. And, you know, one of the clients I talked to this week was mad enough that they were going to do that. They're like, you know, they've been with me a long time, and I've taken great care of them and their families, and I'm ready to go to work. I have work I'm turning down right now because I don't have enough staff, and this is ridiculous. So I don't know if that'll provide any motivation for somebody, but that's what somebody decided to do. The next change that brought about with the CARES Act is actually a positive change. The original CARES Act said it was going to be up to a 5-year loan at 1% interest. SBA, when they came out with their original frequently asked questions and guidelines for the program, actually made the decision to cut it to 2, or they made it everybody was going to be a 2-year loan. This statute has set 5 years as the tone, but again, we have a problem, right? Is all the people who've got PPP money have signed contracts for a 2-year loan with a 6-month deferral. So you have an 18-month repayment period for the amount that's not forgiven. So how can the Congress and the president pass a law that unilaterally changes the terms of a contract that's already been executed by private people? I'm baffled. Anyway. I don't know if I can express my amazement and frustration at this process anymore, but it's unbelievable. It's a positive, right? If assuming the banks and credit unions and people will figure out how to do this, it's a good thing for businesses, because the repayment period has been extended to 5 years and the interest rate fixed at 1%. So even if you don't get forgiveness on all of it, it's still a very inexpensive loan. And that's a positive. And we now have a longer period of time to amortize it and pay it back. So it's not going to be a huge debt burden just as you're getting back on your feet and may need that working capital. Okay. A couple last things that happened with the law that can be deemed positives. It's a case-by-case basis. So if you guys remember, the original CARE Act also gave business owners 2 sorts of payroll relief. The first set of payroll relief was payroll tax credits for keeping people employed. They made it so that you could not take the payroll tax credit with a PPP loan. So if you had a PPP loan, the payroll tax credit's done. That is still the case. You cannot take a payroll tax credit and have a PPP loan. There was also a deferral program where you could defer payment to the government of the employer side federal employment taxes. All right. So it's employer side federal employment taxes could be deferred from being paid to the government. And originally it was you could not use this program as well if you had a PPP loan. This law signed last Friday changes that. And you can now take advantage of the federal employment tax deferral program, even though you got PPP money. So what is the deferral program? The deferral program allows you to not remit to the government, not pay in. So you're still required to calculate it but you don't have to pay it into the government. The federal side, employer side, federal employment taxes. Okay. Now, half of that money, so you can basically do that through the end of the year. And if you choose to do it, you better keep really good records. And I'm going to tell you about a couple of pitfalls that you need to think about before you do this. Keep really good records. You can do this through the end of the year. Your first half of that would be due at the end of 2021, with the remaining balance due at the end of 2022. So it is a way for a business to protect cash flow, which can be a positive, and that's fantastic. Okay, I'm not saying that's bad. Just a couple things I want you to think about, right? I think it's going to be a record-keeping burden. I think it's going to be one of those things you got to track to the penny. You still have to make some deposits. So the employee side taxes that come out of the employee's pay have to be remitted. So you're still making your deposits to the government. This isn't a complete excuse not to make your payments. And this is the big one. The PPP program, one of the attractions of it is there's no personal guarantee. If it's forgiven, it goes away. That process is a great process, okay? The payroll taxes is a different animal. It doesn't come under that exemption. And your employer, your payroll taxes are considered a trust fund, like that you're collecting for the government, and you're holding a trust fund for the government. And your failure to remit payroll taxes can open up the business owner and those other people in control of the business, or who have basically access to the checkbook, to personal liability for those taxes. So you could have a situation where you've deferred, company goes out of business, and because it doesn't make the payments at the end of 2021, end of 2022, you now have personal liability for the payroll taxes that weren't remitted to the government. So it's a program that's out there. I'm probably of a mindset with most of my clients, let's find other money first. I just don't want to mess with payroll taxes. Pay them, get them into the government and out of your hands, and avoid personal liability on this stuff, because that's one tax that can really come back to bite you as a business owner. And so I want you to, encourage you, if you're interested in that, I'm happy to have a conversation with you about it. Let's figure out if this is the right program for you. But I want you to be mindful of the fact that if that payroll tax isn't paid back, there's personal liability to you as the business owner, and to anybody else who might be on the checking account that has control of how the funds are utilized in the business. And it's just something that you should really think about and have your eyes wide open before you utilize that program. Finally, and then we'll end for today, because as I said at the beginning, we're going to have to do this again because they still have to clean the law up. It's not set. We did a webinar a while ago about IRS Notice 2020-32 that said that expenses were not deductible if they were used with PPP money. Senator Grassley, head of the Senate Finance Committee, and several Democrat lawmakers who are head of committees in the House that passed the original CARES Act have written letters to Secretary Mnuchin telling him that legislative intent was that the expenses would still be deductible. This bill does nothing to clarify that. When I wrote the Kiplinger article about the fact that the IRS is interpreting stuff that isn't there, and I got a couple of hundred of pretty nasty emails, and a lot of CPAs and attorneys and accountants across the country don't think very highly of my intelligence level because of that article. But it was the truth, right? I mean, this is the law. This is what you communicated to the public. They took out money on the basis of it, and then 6 weeks later, the IRS comes in and changes the program. And despite what anybody says, not being able to deduct those expenses reduces the net forgivable benefit, because now you have a tax obligation associated with those expenses that now are not deductible. And so your net benefit from the PPP program has been negatively affected. And the only way to fix this is going to be with legislation. We're not assuming at this point that Secretary Mnuchin and the Treasury Department are going to fix it. So we may have a tough decision to make with your tax preparer next year about, do we take a defensive position and deduct it anyway, or what do we do here? So I know I made a plea for folks to contact your Congress people, and I heard from a few people that did and got standard robo responses, which is kind of ridiculous. But if you have connections to your Congress people, pick up the phone and call them and tell them that they need to get this fixed, because it was not included in this bill, even though they were aware of the issue. And I don't know why. It must not have had enough support to get through on a bipartisan basis through, both houses, but it still is a big anchor hanging over this whole program. And it really does impact the small business owner and what the net benefit of all this is going to be in the end. So anyway, if you guys have any questions, please forward them to me afterwards. Hopefully this has been beneficial. I mean, there's still some problems with this. They made a nice attempt to fix things, and they did give longer periods of time and increase the flexibility of using the PPP money. But for the reasons we talked about in here, they opened up some other issues. So hopefully they'll get them resolved here pretty quickly, and we can get back to running our businesses and not worrying about filling out huge Excel spreadsheets and keeping copious records on all of the minutia that they want us to. So I hope everybody's doing really well. Keep positive, keep working. We'll come through this. I mean, don't let all the stuff going on down there distract you. Stay focused on the prize and keep working. Make your business better, make your business stronger. Take care, and we'll see you next time. Okay, guys? I don't see any other questions, so we'll sign off for today. Thanks.